Hello, everybody. I'm Jerry D'Ambrosio, Manager of Educational Content here with VectorVest, and it's my pleasure to bring to you this week's special presentation. Incorporating industry group and sector analysis in your investment process allows you to make more informed and strategic decisions, which can help you navigate the complex world of investing and improve your chances of success. So tonight, I'm going to provide some valuable insights and guidance on how to effectively integrate industry group analysis into your stock picking strategy. I think the first thing we need to discuss, though, and review is how the market is broken down. At the very top is, of course, the overall market. Now, this is the overall stock market. There are other markets that you can trade and invest in, the Forex market, commodity market. We're talking about the overall market, which does consist of 9,167 stocks currently. And we refer to the overall market as the VectorVest composite. That's our broad market index. It consists of all 9,100 stocks there. And that is at the top of the ladder. So if we're looking to take this top-down approach, the first thing that we always have to consider is what the market is doing. Underneath or within that market of 9,167 stocks, we break down 41 business sectors. Now you could think of a business sector as the energy sector or the petroleum sector or the healthcare sector. Within that sector, there are various industry groups. So if we go back to the petroleum, there's a lot of different segments within the petroleum sector, right? You have your drilling, you have your refining, you have your machinery. So there are different groups within that business sector. And within those industry groups, again, 222 of them within the VectorVest program, consist of those 9,167 stocks. So we're taking this top-down approach and segmenting the market in a very refined manner to find the best stocks in the best industry groups in the hottest sectors in a strong market environment. And the reverse approach could be applied in a falling market. If the market's falling, I want to find the worst performing sectors. I want to find or look for the worst performing industries in those sectors and the worst performing stocks in those industry groups. So we're going to take a look at both sides of that because if everybody knows as of the recording here, we're not really in a bull market environment right now. We'll explain that in a moment once we get into the program. But I want to talk about this notion of birds of a feather flock together. You may have heard this before. This just simply means that when an industry group is on fire, when an industry group is hot and performing well, even the bad stocks in that industry group may outperform during that time. A lot of investors will look at the best stocks in an industry group and maybe say, this stock has had a really strong run, really big run in a very short period of time. I might be a little bit late to the party. Let me find some other stocks in the industry group that might not have made their run yet. So they'll kind of gravitate towards the bottom of a list and look for some of the subpar stocks in that industry group, which of course makes them come along for the ride. So when we're analyzing industry groups and business sectors, we use our proprietary indicator called relative timing. The most important aspect of an industry group or business sector is the trend of that industry group. Industries and sectors are cyclical. Petroleum tends to be in favor during the summer months. Retail, a little bit hot during the holidays. So it is somewhat cyclical, but we take a more empirical approach and we use relative timing. Relative timing is the key indicator when analyzing industry groups and business sectors. RT measures not only trend, the direction of trend, but the magnitude and dynamics behind that trend as well. So let's get into it. Let's hop into the program. And I'm going to move us here into our viewers tab. Now we're used to, I'm sure, looking at the trading system viewer, maybe the stock viewer. We use the watch list viewer a lot. A couple of viewers that might be a little bit overlooked are the sector viewer and the industry viewer. Before I get into the sector viewer, what I'm going to do is I'm going to go to a market timing graph first. Remember, our top-down approach is first looking at the overall market. So as of October 12th here, the hard right edge, the market isn't exactly in a favorable environment right now to be bullish. We're in a confirmed down signal. I know we've gotten a couple of rallies here recently, but as of yesterday, the market sold off sharply. Futures are down today. So by no means is what I'm about to show you a recommendation or suggestion to go out and buy stocks today. It's an exercise in finding when the market is favorable. And you're going to define that, right? So green lights in the price column of the color guard, or DEW up signals, or confirmed up signals. Your risk profile will determine which signal you use. Aggressive traders are going to use faster signals. More conservative investors are going to use slower signals. So determine that first. Once your signal is achieved, then what I'm about to show you is a nice exercise to add into your daily routine. But again, by no means with the current market environment is anything that I'm about to show you a recommendation to buy. Now, if you are a little bit more aggressive, your plan here is likely to go short pretty soon. If the market continues to pull back, I mean, we're clearly in a downtrend. If you're that type of trader willing to go short, I'll show you some techniques on finding bad stocks in bad industry groups that might be good short stock candidates. Okay, so market analysis is always first. Then we're going to drill down and we're going to look at the sector viewer. The sector viewer contains 41 sectors, and we rank that list by relative timing. So the sectors with the highest relative timing scores are at the top. Notice there are only 4 sectors right now: office, petroleum, insurance, and paper, that have an RT greater than 1. Does that mean that those sectors are in uptrends? Hard to tell just by looking at relative timing. So what we have to do is look at the charts, look at the sector graphs. Now, what I would say is, with the majority of sectors having a relative timing below 1 and only 4 having a relative timing above 1, those 4 seem to be, knowing what the market's been doing, the most resilient sectors compared to the rest of the sectors in the list, right? Wouldn't necessarily say, and if I graph those 4, that the paper sector is in an uptrend. Let me clean up this graph a little bit here. I'm going to put RT on. I'm going to take off a few of these indicators. Relative timing there at the bottom. Barely above 1, but you can see the trend of the indicators. So the value of RT, very important. What you need to do, though, because it's such a fast indicator and identifies changes in trend, look at the chart, plot RT. You can clearly see what the price of the paper sector has been doing. Kind of wedging here, right? Creating this little wicked wedge pattern. You got RT trending lower. So this is not a sector that I would particularly favor taking this approach. We may not find, and same thing with office. Petroleum may be something that you might consider here, a little bit different in that got a recent trend over the last 4 months, recent pretty significant pullback, and a resumption. I know oil's up about $3 this morning. So petroleum might be something that you would want to consider. Insurance looks a little better as well. Now, I know we have this bearish divergence between the RT and the price of the sector. But what I would want to look for are sectors that are really screaming up the page. Now, this, of course, would be in a rising market. So you're likely going to have the top sectors performing better in a bullish market, right? Hopefully that's clear to everyone, and not a knock on the technique, because we're not finding any sectors that we would want to participate in right now. We're not going to find much that we would want to participate in right now with the condition of the overall market. Now, with the RT score of 1.09, if the chart looked favorable, I would dive in a little deeper to the office sector. So if I double clicked on the office sector, that gives me, in this case, both industry groups in that sector. And we rank the industry groups in each sector by relative timing as well. Now, we assign an RV and an RS, a VST, of course, and analyze sectors and industries the same way we would individual stocks. But the RT indicator is really the key. It's really the indicator that you want to favor. So office equipment automation has an RT of 1.14 with an RT ranking of 8. So we have, 222 different industries. We rank the industry list from top to bottom. So office equipment automation happens to be the 8th best industry group out of the 222 by relative timing. So what I would do, again, double click, and that gives me all of the stocks within this industry group. And here is where you would analyze stocks the way you normally would. The list is sorted by VST. Notice there's only two stocks that have a VST score above 1. They have 4 holds and 1 sell. I mean, the buy to sell ratio is well below 0.2, so there are a tremendous amount of more sells than buys. So, you're not going to find too many buy rated stocks, period. But you would start from the top of the list. Xerox, we're all familiar with Xerox. It's an undervalued company. I'm skipping over PBI because at face value, I could see that it's overvalued with rather poor fundamentals. Xerox seems to be best of breed, right? You've heard that term before. Undervalued, good upside potential. Our relative value indicator 1.42. A little bit of a risky investment with our RS indicator at 0.77. Now it's not in an uptrend right now, so we're not going to run out and buy it. It's got a sell rating. I don't like the CI score of 0.61. It's got a good earnings growth rate at 16%. They're earning $1.41 per share. All in all, pretty good, with the exception of, it's in a downtrend. So what I would look to do, maybe put this stock in a watch list. You always want to create watch list of good stocks, right? No matter how you come across them. So if you're taking this approach to just simply look for good quality stocks in good industry groups, regardless of what the market's doing, and you want to kind of create hit lists or watch lists of stocks, shopping lists as we would refer to them, for when the market begins to move higher and maybe we get a confirmed up call and things are looking a little bit better. So this is a good exercise in creating watch lists of stocks that you may want to consider once the market improves. And this is the type of analysis that you would go through. Favor undervalued stocks with good upside potential. Now, the safety factor is going to be kind of determined by you, right? Are you willing to take on a little bit more risk on an investment or not? If you're not, then you're going to look for RS above 1. So you go through that same exercise. Now, you could look at the office supplies industry group. It has an RT of 1.04, an RT ranking of 23, which is good as well. So same type of thing, double click. Looks like we're getting some better stocks here. Brady Corp. It's undervalued. It's got good upside potential. It's got a really good RS score. It's actually in an uptrend with a CI rating above 1. It's got a buy rating, good earnings growth rate, $3.87 per share. So that's a stock that I would right click on and I'd add it to a watch list. So petroleum is the next best sector here, insurance. And you'd go through that exercise. Now, for those of you that are looking to short stocks, kind of take the inverse approach. Instead of sorting by relative timing descending, you flip it over, you click on the indicator, and that'll sort by relative timing ascending. At the very top here is the drug sector. You got healthcare, you got auto and truck, software, internet. Now these sectors are underperforming the majority of spaces that make up the stock market. So if I want to drill down, I double click on the drug sector. You got wholesale distribution, you got ethical, biomeds, generic. Flip this list over, and the drug biomedical genetic industry group, rather poor, right? $13 price average, $7 value, poor fundamentals, falling in price. Out of 222 industries, this ranks 211. Double click there. Resort the list by VST ascending. Now you're probably hard pressed to find a lot of stocks in here that are above $5 even. So you may not find a lot of stocks to short in this particular industry group. Got one here, ADTX, it's $11. We value it at $1.50. No RV, really low RS, relative timing in a significant downtrend. Right click on it, view the stock graph. I mean, this is the type of stock that you want to short. If it continues to move down, of course, look at that RT really low. Stock has gone from $70 just a few months ago down to $10, and it's done nothing but fall here pretty much ever since. Now, if we move to the industry viewer, we're just breaking down all of the segments within the sectors that we were just looking at. So at the top of the industry viewer, ranked by relative timing, is energy coal. Happens to be the top industry group out of 222 in the program. As a whole, as an average, it's undervalued. The industry group is undervalued. Got decent upside potential, 1.02 RV. Little bit risky, sure, but it's in a strong uptrend, the strongest of the bunch, and it's got an RT ranking here, 1-2 interchangeable. Double click on that. Here are all the stocks in the industry group. And notice there are a lot more buy-rated stocks in here, right? As opposed to the drug sector and the industry groups in that sector, we saw a lot of sell ratings. Well, this is why this is the hottest industry group right now. Look at all the stocks that are in strong uptrends. A lot of these stocks have buy ratings. A lot of them have strong RTs. Haven't talked about the fundamentals yet, but remember, it's the momentum. It's the strength of the industry group in the short term that we're favoring. And relative timing is a short-term trend indicator. So you're going to want to favor the undervalued stocks with good upside potential at the very least. Again, this one's a little bit of a riskier investment. You might pass on that if you're not willing to take on too much risk. Strong RT. Good CI, good earnings growth rate, across the board, everything looks pretty good there. So these are the types of stocks that you might want to put in a watch list for future review. You can flip this list over as well. Look at the worst performing industry groups: crypto, retail, healthcare instruments, telecom, fiber optics. A lot of retail industry groups in here, right? So if we go back to the sector viewer and look for retail here in the list, you could see the retail a little bit higher than middle of the pack, the retail sector, 0.73 relative timing, not in an uptrend at all, and that makes sense. The majority of industry groups within that sector are underperforming as well. Retail drugstores, home furnishing, department stores. These industry groups tend to outperform during the holidays. Hey, we're getting there. But these are industry groups that you might consider looking within to find stocks to short. And if I wanted to open up the retail sector, double click. Look at all the sell ratings in here. Resort by VST ascending. And again, you could sort the list differently. You could sort by CI ascending. You can start to combine indicators. If you're bottom fishing, for example, and you want to look for good quality stocks that have been beaten down, you can use a sort like VST divided by RT or RV divided by RT. So if I come up here to the sort, I can change the sort when I want to combine indicators. I can go VST divided by RT. Descending. Now, relatively speaking, kind of in a bad example, but relatively speaking, these stocks have the highest VST compared to their RT. Let me show you a better way to do it. I'm going to go back into the top industries, go to energy coal, double click here, resort the list by VST divided by RT. Here we're looking at, relatively speaking, the highest VST ratings in this industry group with the lowest RTs. Not the lowest RTs in the list, but the lowest RTs relative to their VST scores. So good quality stocks that might be underperforming, nice little bottom fishing sort there. All right, so we're going to circle back and leave you guys with what the overall market is doing. Very important. I can't stress it enough. We're not in an environment that we're really going to, look for stocks to buy right now. Going back to the market timing graph, I know it says to use caution here, but a big sell-off yesterday. Looks like another rip lower. Futures are down this morning. We want to look to play the market to the downside potentially here moving forward if you are a little bit more aggressive. I think adding that exercise of, in this case with the market a little bit bearish, that you want to flip the sector and industry group over. Sort by relative timing, ascending within the sector viewer, within the industry viewer. And with the stocks in those industry groups and sectors, you want to resort by VST ascending and look for the bad stocks that are falling in price within those industry groups and business sectors. Be sure to join us again next week and for our daily Color Guard reports all next week as well. Have a great weekend, everybody.